China's manufacturing activity strengthened in August, underpinning the sentiment that the world's second largest economy is gathering steam. Joining me down the line to discuss is Maritza Cabezas. Now Maritza, many China watchers suggest that the real economy, which grew at a 7.6% annual rate during this year's first half, might miss the official 7.5% target for the year. Can China avoid a hard landing, do you think?
Yes, definitely China can avoid a hard landing. China is showing clear signs of stabilization. The reports moving into the third quarter are positive. It seems that the mini stimulus provided in the past months is working its way through the economy. I'm referring to investment in railways and procedures to simplify investments and exports. So these have all been helpful measures, and it seems that the economy is picking up now.
According to some, the recovery is being driven primarily by domestic demand, but international demand is picking up too, as we can see from the jump in new export orders. Is China's economic performance enough to boost markets' confidence in China's recovery amid the turmoil in some emerging markets?
If we look at China's manufacturing activity in the past weekend and today, we had the release of the Purchasing Managers Index, both the official and that from HSBC. And what we see is that the local economy is being supportive, but also foreign demand. The recovery in the U.S. and stabilization in the Eurozone have been supportive to exports from China. So, China has fared relatively well during the recent turmoil. Its close capital account, or relatively close capital account, and managed foreign exchange, I think they have been helpful in this process or in this time of instability. But in general, China has been, let's say, in the past months already showing some signs of recovery.
Just recently, the dollar yuan shrugged off the Chinese central bank's effort to guide the pair's fixing slightly higher on the back of some disappointing US data. But do you think the PBOC will be comfortable with the currency's current levels? What is your outlook for the yuan moving forward?
China's yuan forwards rose after the latest PMI reports that I already mentioned. We are positive on the outlook of the RMB. It proved quite resilient during the recent sell-off in emerging markets. I mean, if we look at the data this year, the yuan has gained 1.8%. That makes it the best performer among many emerging market currencies. I think the People's Bank of China is more interested in the stability of the currency, and I think therefore it will continue to have a managed currency in the coming time. But we are quite positive on the outlook of the Chinese yuan.
Maritza, it's been lovely chatting to you as always. Well, viewers, that's all from me for the moment, but click back to Dukascopy TV for today's press review, week ahead interview and targets and focus programme. Goodbye for now.